Do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion. It will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, I mean, it runs circles around SPY, number one. And I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category. All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically.
Bitcoin is projected to become the cornerstone of the entire crypto asset ecosystem, with an estimated value surpassing $20 trillion by 2030. This anticipated growth is expected to attract a surge of institutional players into the market, driving the value of Bitcoin to unprecedented heights, potentially exceeding $1 million per coin. Cathie Wood recently discussed these predictions, focusing on the rise of Bitcoin ETFs and the resilience of various Bitcoin investment instruments amid market changes. Wood emphasized the importance of on-chain analytics and understanding Bitcoin's demand dynamics, highlighting a significant milestone where Bitcoin's supply growth is poised to fall below that of gold. She anticipates that this, coupled with Bitcoin's inherent scarcity post-halving, will lead to accelerated price appreciation. As the crypto market evolves, Wood underscores the transformative impact of the April Bitcoin halving, signaling a shift in the dynamics of the entire crypto landscape.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Well, we didn't know until the very end what GBTC was going to do. If GBTC, which was the Grayscale Bitcoin Investment Trust, had cut its fees to where we are or even close, the story would have been very different, I think. Inertia would have kept kept clients in that fund. But GBTC has donated quite a bit of share. It's at about 1.5%. We're at 21 basis points, ARKB is, because we're looking at Bitcoin as a public good. It's the financial superhighway, and the most important thing to us is that we provide access at the lowest cost to entice as many people as possible to participate in what we believe, in hindsight, will be considered a revolution, a financial services revolution and a monetary revolution. Well, I guess what we were hoping is that as GBT was ceding share, that we would be among the top three, because we believe that 3 ETFs ultimately will win. And we are, against most expectations and against some very formidable and much larger companies, we are number 3. And actually our number is over 2.1 billion now. So we've been very, very pleased. Of course, BlackRock and Fidelity are number 1 and number 2. They're converting their existing client base from GBTC into their own funds and attracting new funds, of course. But we have a disproportionate amount of new funds coming in onto our platform. Well, of course, we don't know all of that, but we knew how much we were going to convert from GBTC. So, and we know that it is a very small percentage of what we now have. Has the rest come from GBTC from other platforms? That's very possible. But in terms of what we were converting internally from GBTC to ARKB, it was roughly 100 million out of the 2.1 billion. The halving, so we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response, and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around, when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. But I think what we have going for us this time is the financial markets. When you've got the entire ETF infrastructure out there ready to arbitrage these sorts of events, we may pull forward the price increase and accelerate the transition you're talking about. Well, we're representing thousands of people, each of whom is going to make his or her decision about what to do with this Bitcoin. We do not control that decision. Our clients do, and they are, they are individuals who actually have, they're definitely not whales. They're just tiptoeing into the space. So I don't think you could describe us as a whale from that point of view. I do think that the concern about centralization with ETFs is on the market's mind. I think as more and more people understand that, wait a minute, there are thousands and thousands and thousands of people making decisions here. Number one, we're not making the decision. It is our clients who are leading us there. And if you listen to that Bitcoin brainstorm, you'll see the movement within the mining community to counter what they perceive as centralization. And so it was very interesting to do a minor Bitcoin brainstorm as our ETFs are taking off. I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing is, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and Vanguard will be depriving its clients of access to a new asset class, which, if continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So, I think there will become, even for the Vanguard ecosystem, a demand pull.
Cathie Wood shares captivating insights into Bitcoin's journey within the financial realm, despite setbacks with Grayscale's Bitcoin Investment Trust. However, ARK Invest performed admirably, ranking third in ETF inflows. Wood's infectious optimism about Bitcoin's future prospects envisions it as the predominant force within the crypto space, potentially exceeding $2 trillion by 2030. Beyond the numbers, Wood also discusses the impact of the Bitcoin halving on prices and how ETFs are enhancing market efficiency, making Bitcoin more accessible to everyday investors. Addressing concerns about ETFs controlling Bitcoin, Wood emphasizes that these investments represent numerous individual investors rather than a handful of major players dictating the market. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.